What's up with this picture? You guys watching the Raiders game? Looks like it's old the way they're filming it. Maybe my TV just stinks. What's up, y'all? Doing my little gathering tonight in about 10 minutes. If you don't have the link to the room or the password, I'm going to make you take an extra step tonight. Just email me at thewarlock at hitthebid.com. We're going to go over the trades from today and what we are prepared to do tomorrow and how it translates into option trades, because Friday is my favorite. Thursday has actually been better, but Friday's been pretty good. Friday is when your options are trading with no premium whatsoever. So I'm going to show you some examples of where you can take a 15 or 20 cent move and make 2 times, 3 times your money on it. And it's not hard to find because we're looking for the same trade. And again, we call it the perfect storm. If it's one of those 1 minute multi-day infinite leverage. Yeah, I heard about that. What is this? I didn't know about what's going on. Did I miss out on a party or something? $50 million in leverage I could have had. I still would have only bought one contract. Yeah, so what we're going to do, we're just going to look at who reported tonight and some of the stocks that have been trending that might follow through tomorrow, especially with U.S. Steel on the gorgeous, beautiful downgrade. Thank you very much, dickhead. Once again, downgrade providing a liftoff for the stock because, again, all upgrades and downgrades are pure, blatant forms of manipulation, paid off criminal activity by Wall Street and the so-called analysts that pretend for the last 80 years they know something that we don't know. If they did, they would have been telling us to get out of the market in 2009. They would have been telling us a lot more of stuff that would have actually helped us, opposed to fuck us up. You are here to help us, not to fuck us up. You know where that's from. So, post everybody on Wall Street and a few scattered franks, swing fish being one of them. Great guy here. Did your guy come through? He reached out to me, and I know, is that Gil? I forgot which guy. I go from nobody contacting me to an influx of requests, and sometimes that's when I fall behind. Cam, yes. Cam, right, all right, yes. The interview, right. That's coming out soon, right. See? I just do what I do, and I imagine all the pieces around me fall together. But I finally got a guy who's organizing my life pretty well right now. So if you're waiting to be contacted, just reach out again. Either contact me, or more importantly, we call him the Minotaur. If you want to call directly to him, the Minotaur at hitthebid.com. He'll get back to you. Yeah, thanks, man. So yeah, what we're gonna do tonight is, this is the only homework. You know, I don't know if you get emails from Tim Sykes every other day how he's doing homework. Are you? Because homework backfires. Let me explain why. And this is when I was taught, and I was taught this 20-something years ago. If you come into the market with a self-perceived notion of what is going to happen, it's hard to then see the market for what it's doing. Write that one down. Self-perceived notion. I did not make this up. That's too smart for me to think of that by myself. If you come in tomorrow with a mindset, I'm going to be buying this stock when it does this, you're not going to appreciate the chart and what the stock is actually doing when it's not doing what you thought it was going to be doing. And it could even to the point where it makes you believe so wholeheartedly that you're right about something and you're going to lose money. I come into the market, first of all, I come into the market with no intentions of ever putting on a trade ever again, every night, and I'm not kidding. I have no intentions of ever trading again, ever. That's my attitude. That's my attitude right now. I have no intentions of trading ever. But if I've got an 85 to 90% chance of succeeding, I probably should put that trade on. That is the discipline that I teach. And you will eventually evolve into that type of trader where you're looking so specifically for the VWAP reversal or at least a range break. The range break reversion, fantastic trade. Your late day VWAP break, fantastic trade. The blow off top reversion to the VWAP, fantastic trade. And then obviously, if you get your momentum through the main VWAP, and then you have the multi-day VWAPs and so forth and so on. Again, this is not something that you're going to learn in a day. I do highlight all the different types of trade, and I behoove you to stay and stick around and, you know, learn this trade. It eventually, when it clicks and when it's what you're doing, why would I wear a toupee? Wait, I actually have one. Let me know if you like. If you like this look, I'll go for it. I was thinking about it, you know, and again, you know, funny story about toupees, right? I was an investor in a company that made LCD screens. Yeah, I know, it's old. This is when we were going to more flat screens, right? And they made a chip that made the display brighter. This was before LCD. I'm old, and I was an investor in the company, right? And I would listen to conference calls like a good investor, right? But then I saw the guy on TV one day, the CEO, and he was rocking some fucking animal thing on his skull. What do you think? Like a rocket? What's cool is once I put a hat on, you'd never know this wasn't my hair, right? Sup, dude? Fucking rockin', brah. Fucking rockin', brah. Shit, brah. Shit, man, we went out to LA and, bro, I was smoking this crazy weed and I woke up with a whole new head of hair. It was fucking crazy, bro. It's fucking nuts, bro. So we're talking trading. We're talking options and shit, bro. I put like $80 into a trade, man, and it was like $600 in like 3 minutes, bro. I'm telling you. No, but anyway, this guy, he was wearing such a fucked up rug on his head that I dumped the stock and I went short after owning it for 2-3 years, waiting for massive returns. The stock didn't do dick. Never really made any money on it. But seeing him wearing that toupee made my investment decision for me. You know why? Because if this guy is going to pretend that that's his real hair, how the hell can I accept anything coming out of his mouth about earnings per share and the future aspects and the future prospects to his company? All I'm looking at is that shitty thing he's wearing on his head. And every word out of his mouth, it was like a Charlie Brown fucking skit. Wah, 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 wah. I had no care what he had to say ever again. And you want to hear the sickest part? The company went out of business. Genesis Microchip, GNSS. I think they actually went down to like a couple of dollars a share and got taken over, whatever. But the company was virtually bankrupt. And that decision saved me about 80 grand because he was wearing some shitty ass rug on his head. So, right? If you didn't know me, sup, dude? I'm a very handsome fella. So I can rock a bald head. And look what my mom did. Look at the shape of my head. It's beautiful. People would pay me for this head. I'm rocking a 6 7/8 of total gorgeousness. Look at me. Fantastic. I should have shaved my head 25 years ago instead of hanging on to those awful just strips that I had on. I was born out of the Matrix, my friend. That's right. All right, so if you don't have it, man, get involved. We're going live, homie. So what we're going to do today is a brief walkthrough of how we find the idea and what options we're going to trade. And by the way, how awful the Chargers. Come on, Raiders. The Raiders. Raiders are my backup team when the Jets and Giants suck. Sup, home pieces. Y'all in the house, y'all? Chickadee check. I think we're going to jump right into it. I want to show you the 3 or 4 trades that we did this morning. And if those trades arose or do arise again tomorrow, how we're going to use options. I got a lot of stocks that are right at option prices that I think are going to be really good for tomorrow. U.S. Steel, Uber, Bed Bath & Beyond, Beyond Meat, and then, of course, our companies that reported earnings. But let me just say hi to my family quickly and wait for some more people to show up. Let me know if you're in the house. Bodine's in the house. All right. I generally trade options. The most I'm going to go out all right. Yeah, I'll get into it. Let me just go say hi. Baba Booey. I'll say hi. I'll tell you everything I do. You know, I could do anything. I was born an options trader. That was basically the first thing I ventured. Well, not the first thing, but the first official class I ever gave was an options class. And I got my options principle so I could become, so I could legally recommend option. I don't even know why I even got that thing. The Series 24, I think it was called. I had a 7, a 63. Oh, either the 24 was the options, or was it a 10? I don't know. I took a bunch of exams just to show off. But I'm all self-taught. It's all from experience, really. Be right back. Some days. What's up, Stacy? So you want to see what I got for my birthday? Now, you guys know there's that. Wait, hang on. What are these stereotypical or what's the negative thing called? Stereotypes. I guess stereotypes have a negative connotation, but stereotypes are born out of truth. Jews were frugal with our money, right? All that stuff. We own the government. We own the media, and we're also the devil. But it was my birthday. Right now, you got to come to the room. I'm just going to hang out for about an hour or so. I just want to highlight what we're going to be focusing on tomorrow. Hey, man, thanks. So, Maui gyms. Now, again, I don't know if you are into sunglasses or whatnot. These are fantastic. I had a pair from 2012 that somebody gave them to me then back in 2012. And I lost them. So I had a 7-year run because obviously they were like $250, $300 sunglasses that I also don't lose stuff because I have got, you know, OCD and ADHD. I know where all my shit is. So I lost them, and my wife was thrilled because now she's got a present idea. And I was like, I don't know if I want to spend that kind of money on new sunglasses, but here they are. And I got my new glasses too. By the way, I can't see in front of me, so I got, thanks, man. I try to always get glasses that remind me of the Terminator. I can't even see the screen right now, but my new Maui Jims, baby. There we go. I'm 48 now. Boom. You give me a pair of $20 sunglasses, I'm good, you know? But they are definitely a lot more crisp and they are damn comfortable, but it's, and the sick thing is, I'm in this place, Sunglass Hut, and we're the only ones in there, of course, because who buys these sunglasses? These were the cheap ones of the, yeah, you could have got Fendi's for $500. You had Versace. You had the Ray-Bans, obviously. And I mean, it's crazy. I mean, I got to look at it this way. If I can keep them for, if these last 7 years at $320 over that amount of time, so then it's not that much money. That's the way I look at my car. When I bought my Challenger, I paid cash for it, and it's going on 9 years. So put it over 9 years, you know, what I spend, like $26,000. Happy birthday, man. Happy birthday to you too. I look at everything as if I can get my money's worth. Again, I don't know if that's a Jewish thing or not. Like my TV. And when I bought my $5,000 TV when I first moved into this place, I was like, what the hell am I doing? But I love this freaking TV. V8. I got the stripped down one because I wanted it to look like an old car. No digital readout, no anything, nothing. Just, you know, stripped down, the bare engine. And because I'm getting a resto mod. So I got a 67 Chevelle resto mod that is got my name on it. I found a couple. I got a 50. If you like old cars, we could talk old cars all night. But hey, buddy, we could. I'm looking for. I like the Bel Air resto mods because I'm not handy, so I need something that's not going to break. You give me an old looking car with a brand new engine and some, you know, nice guts. That's what I'm looking for. I had one. I had a 67 Chevelle resto mod. It started the bidding at 23,000. I got up to 27, 28. I wasn't about to pay more than 30. The car went for $55,000. So I knew the price was too good to be true, and it doubled in the auction. And then I was on a 67 Buick Grand Sport. I like those 67s just before everything started getting rounded off. But now I'm thinking maybe I get something the year of my birth, like the 71 Chevelle is pretty hot. 71 Dart. I just dig those old cars, and I don't like a lot of buttons. So give me an air conditioning that works, a really nice radio, and a newer engine. I'm ready to go. So what's up, y'all? All right, you guys want to come on over? You just want to look at my dumb head because you're going to miss out on all the charting. Who's hanging out here? Ed Wilson's in the house. Ed, have you been participating yet? Have you noticed how these trades are working one after another? You got your chart set up. I want to send you, dude, Gary. That was the car my dad had. He had a 71 Ford Pinto, the shit brown one, the ones that exploded if you hit it too hard in the back. Yeah, that's what we were driving around. And then we had a 76 Malibu after that. My dad had a 71 Ford Pinto. That's hilarious that you mentioned that car. So yeah, we're talking to some BS on YouTube. I just want to Nah, I'm not drinking, brother. Yeah, I'm saving it. I'm old. I went out last night, right? I went to sleep in the middle of the day yet today. I traded, I watched a little TV, and I was out for 2 straight hours. So now I'm up. Yeah, I went to had Grateful Dead show out in Long Island. I drove 2.5 hours out, an hour and a half back, ate dinner at midnight, got back home at 1:30. Couldn't really sleep right away because I had 8 cups of coffee, and here I am. So, yeah, the extracurricular stuff. I even left a party the other day early. I was at the Comic-Con and they had an after party. Oh man, we were ripping. And I actually left before the night was over. I never do that. I'm the guy being escorted by security usually. Sir, you just have to, you can't, you don't have to go home, but you can't stay here. All right, let's get into it. This is for Ed Wilson, everybody. Ed's one of our new guys. Thanks again, Ed, for joining up. I just want to show you a couple of the trades that we were in today. So let's just I'll show you the ones that were, easier than the Roku, because the Roku turned out to be a pretty awesome trade because it obeyed all the rules of our ranges and all that stuff. You want me to bite you? It's not that kind of show tonight. Picks from the Dead show. You know what? I'm almost like anti stuff. I never want to film while I'm watching a show. I just like to enjoy myself. Usually plus I kind of forget because I'm usually, lit up. Speaking of drinking, I found another new vodka I'm digging. Clausen's I forgot the name of the vodka, but pretty smooth. If you want to find a new vodka, if you could ever find this, I keep this handy because this is the greatest vodka in the world. If you could find it, get it. This is Kaufman, but this is $200 or no, $150 a bottle because you got to get it imported. But there's a bottle of vodka called Monkey in Paradise. Fantastic for $20. Greatest $20 bottle you'll ever get. All right. So Ed, you ready? Let's do this. We're always looking for stocks that are gapped down, right? Because those shorts don't like it when they break the VWAP, right? And what was the first one? The first one we did was actually Uber, which was kind of weird. Wasn't thinking about Uber this morning. And again, this is why preparation, as much as you prepare, you never know what you're going to be doing the next day. So I just happened to catch this, near the open. Here's your opening candle. It usually starts with the opening candle, right? First 2 or 3 candles are usually just mad chop. That sounds like a good party, Rich. Here's your opening range break. So here, 26.85, right? And let me just get rid of some of these lines here. Hold on. So our favorite trade is the opening range break once it establishes itself over the VWAP, right? Especially on stocks that have been downtrending, because you're going to get, come on in here. So here you get your free pass right now. Hitthebid.com. Go to hitthebid.com, right? Click login, and you're going to go to the login window, right? There's 4 columns. First row is to put your silly name in, whatever name you want to choose for yourself. And then, oh God, yes, it really is at this point. Log in, you get to the main window, put your funny name in. Second column, second row down is your official email address. If you have to put in real information because it won't work otherwise. Email, phone number, and underneath that in the 4th row, the password is capital I, will pay Kenny. Just a capital I. Oh, I will pay Kenny, capital I, and you'll be able to log in. You'll see my screen, you'll hear my voice, and inevitably, that's what you should do. All right, where are we? Isn't it funny how 15 years? Yeah, it is. When I first built a website, I had to like get an engineer to figure out how to do streaming. He hates the Chargers, so we're not in this game. Thursday night's just a dumb game to bet on. Plus, we know what's going to happen on Sunday. The Giants are going to beat the Jets. If the Giants lose to the Jets, I mean, these teams, I mean, they both suck, but I'm taking the Giants. Or I might just lay off this week because it's been a pretty good run we're on. But the Chargers are like the most annoying team to bet on because you don't know which team is going to show up, right? All right, we could talk all that smack in a little while. We're here for Ed. So bang, right? Let me just put these lines up here. 26.85, right? Opening high, right? So within this first candle, right? You're already starting to sell off, and then you break the lows. Second candle in, you're thinking, oh, here goes Uber back down. But then the third candle, you start to get over the VWAP. Fourth candle, you're struggling to stay above it. You got a 1 minute multi-day VWAP collision right there, right? There's the multi-day 1 minute break right there. And this is the moment of truth for me. Again, it's not that these trades are going, I know what they're the worst. It's not like these trades are always going to work. But if you consistently take this particular setup, you're usually going to come out ahead because risk reward is in your favor still. So I'm buying it at 26.85 right there, right? 26.85. And I'm using the bottom of the candle because the bottom of the candle is the 1 minute and the multi-day VWAP. So usually a $27 stock. Somebody asked me to elaborate on sizing the position. I use most of my trades go into a $50,000. So I've got $250,000 of buying power in a day trading account. I also have just I have an options account and quote unquote a swing trading account. And then I've got all my other little accounts for my kids and my family. But generally, $27 stock, we're looking at 800 shares to start. Okay. So on this occasion, first trade of the day, I don't get aggressive. Started with just 300 shares, right? So I'm in 300 shares. And again, I remember this is all going to lead into option trades because I want to talk about these trades, but if these trades happen tomorrow, what we could have been doing, what we will be doing. So here's the reason to get in. You're establishing yourself over the 1 minute and the multi-day. We already know that Uber's gotten its ass kicked already. We're kind of looking in the back of our minds for possible squeezes, right? Opening candle high break after the VWAP break. That's my moment, right? Now, I don't remember if this was real or not. Apparently, I didn't pay any attention to that anomaly. But I'm using the bottom of the candle and generally one candle prior. So if I'm in, let's make it. It was 300 shares. I didn't increase my size on this one. So 300 shares at 26.86, right? So I'm putting a stop on 200 at the bottom of the candle, which is basically the VWAP. So we're talking about 26.69 on 200, right? And then I'm going to use the bottom of the prior candle. And that's usually the standard rule because we're getting in on a range break. Your VWAP's probably going to be right there nearby and the prior candle. So I got 300 shares stopped there and the other 100 there because generally you don't want to. How do I measure order flow? I don't. I'm looking at the time and sales just to see if I could catch any large blocks going through, but I'm looking at the volume bars at the break because obviously I'd like to see a volume spike as it's breaking the VWAP. It gives me that added feeling of comfort that I'm joining in on the right side of this trade. So I'm buying this thing at 26.85, right? And now again, I know we're not life-changing right here. I get something at 26.85, I get that first 15 cents, I'm selling a little bit at the whole number. I throw an offer out there at 27 just to see if I get taken, right? Boom, 100 shares out the window. Now I'm feeling good about myself, right? I got 200 shares left. I just sold some at 27. So now, right? Who's Stacy H? So anyway, here, so check it out. So here, I've already taken 100 shares off the table. Now that the trade's gone my way, right? Now that the trade's gone my way, now I put the rest with a 1 cent profit. Okay? Yeah, 50 times margin. These are minute candles. Yep. I've been trading minute candles my whole life. And a lot of people say it's insane because it's so much chop. But usually we're getting in at these great prices and we're using this VWAP, and you're usually getting some momentum on my trades. Plus, I'm very quick to sell also. So I like the minute charts. So like I said, here we have 27, whole number, bang, I'm selling a little bit. And then I cancel my stop from these two prints. Now I re-enter the order. 26.86 is going to be my out, right? Now, again, I don't know if this was a real candle because I didn't get stopped out of this trade. So this might have been an anomaly right there because, or maybe I didn't send the order yet. But once it broke back over 27, my stop was 26.86. That's what I wanted to show you, okay? So in this case, right, what are we doing? Let's say we're buying 1,000 shares just to make easy math. $27,000 worth of Uber, right? Or $26,850. Let's say it goes up to 15 cents, you made $150, right? But you just laid out $27,000 to make $150. Again, another reason that my dad doesn't get this. He's like, why the hell would you do that? You're putting 50 grand on a trade to try to make $100, $200. It never made sense to him, the whole concept of day trading. If you're going to put that money up, you better be investing it, not just throwing it out there, hoping for the best. So on that note, tomorrow, if we have this same setup, right, we're going to be looking at, well, I'm going to ask you this question to see if you guys know the answer. And again, I'll give you a mad hint. We don't want to go and pay premium on the trade, right? We just want to use the options as leverage. No strategy other than buying or selling. We're not selling premium. We're not doing anything. We're going in the direction of the belief, and we want to pay as little as possible to be involved. So what do you think you'd be doing? Instead of buying $26,850 worth of the stock, what do you think you'd be doing? Let me just get the chart. Let me get the Uber options up. Now, smoking a bowl. 27s. Right. Now, I can't show you the prices. I mean, I could probably get, it's funny. My dad's still long from 2009, the Qs. He's my hero. I convinced him that the market was going to go up for a decade, and he actually held the whole time. So he's still in, and I've been telling him to sell since 175, and I've been wrong for 25 points on the market. I thought we were going to level off and maybe have a decent sell. Anyway, stop jumping around. So instead of buying all that stock, you can go out, and here's why you want to, oh yeah, eventually it's going to go to zero. I'm with you, right? But the reason I like Fridays is because these option premiums, they're built on the time left in the contract, right? And they're built on the volatility. So if there's no time left in the contract is going to trade as cheaply as possible. The only time this thing is going to be cheaper is at the end of the day. And at the end of the day, you're so close to expiration that why would you do the trade unless there's some massive circumstance? Yeah, I love selling. We'll talk more about that when I do a whole full-blown options seminar. This is more of a preparation for tomorrow and, just a little schmooze. So because we're just looking to play the action for the day, you're going to buy, if you're over the 27.75, so basically you usually have 26.50s, you have 27s. Now, back in the day, you didn't have this luxury. You didn't have options that expire every Friday, right? None. Nothing matters except 4 o'clock, the deadline. That's what matters. That's it. Because all we're doing on Fridays is we're switching from trading the stock to trading the options. Because here, and this is for the guys that don't have the $50,000, $100,000 account, some guys can't buy even 400 shares of Uber. They can't afford it. But in this case now, you can go ahead and buy yourself 4 contracts for very, very cheap. All right. So in this case, right, because it's expiration and the stock's at 26.85, those $27 calls, now again, we're still brand spanking new. We're only 5 minutes into the day. So they're going to have some premium. But on options expiration on a $27 stock, you're talking about 15 cents, right? So what's that 15 cents mean? Again, I'm talking to you guys that don't know about options at all. 15 cents per contract. That means for just on, let's round it off to 1 contract, right? 1 contract gives you the buying power of 100 shares. But in this case, especially now without commissions, which is fantastic, you're paying 50 cents a contract. So you're paying 50 cents for commission. So if you buy 1 contract for 15 cents, basically that's $15. All right. So for $15, $15.50, you're buying 100 shares of Uber. But I want to make it more grandiose. Let's talk about 10 contracts. Because 10 contracts for that low price of 15 cents. So 10 contracts at 15 cents per contract, you're about $150. Let's forget about the commissions for a second, right? For $150 now, you've got yourself 1,000 shares of Uber. Boing, right? So now, a lot of people misinterpret the way these options get priced, right? They're worth 15 cents when the stock's at 26.85. They think that you need the stock to get over 27 to start making money. That's incorrect. As long as the stock is moving up and you still have time that's left on the contract, they'll start moving up. It's not going to be penny for penny because remember, you're buying a 15-cent contract at 15 cents when the stock's 26.85. So now the stock moves to 27. Those contracts are going to be worth maybe 25. But think about it. Here you've laid out $150 for 10 contracts. The stock goes to 27. The contract only goes up about 10 cents, right? But your $150 now is worth $250. So on a percentage basis, you're killing it. And you're laying out a tenth, not even a tenth, you're laying out 100th of the money to make the same amount. And when you get a trade that follows through like this, again, same principles apply. If you buy 10 contracts at 15 cents and they go to 25, sell a few. Then you put your stop at 10 cents. And then what happened next? The stock followed through and you went up to 27.30. And look, it hit 27.30 and it's still only 10 o'clock in the morning. So intrinsic value alone, right? These options are going to be worth at least 30, right? Usually buying 10 contracts, especially with these 15, 20 centers. Roku at $250 a contract, it's kind of, you got to commit. Usually we're doing 1 or 2 contracts. What up, Mr. Vizcaíno? Yeah, so a lot of times it does come down to the price. I know for a fact today's Roku option trade scared people out because they look at it as, I'm not going to pay 250 for a contract. What if it goes wrong? What if it does? But look at it this way. And I'll get to the Roku trade in a second, but let's stick with this Uber trade, because I think what we're going to see tomorrow, we're going to see some follow through to the upside or the downside. And I'm definitely going to be looking at some Uber for a possible squeeze, maybe over to 28. And if it rolls over and dies, that's good too, as long as you're prepared to know what contracts you want to trade. So tomorrow we have the luxury of trading the 2650s, the 27s, or the 2750s. So I think Uber's going to be in play again tomorrow. And like I said, if you trade the contract correctly at the right time, well, I will get to all that stuff. I love options. I mean, I could do a 5-hour class just on options. When you're talking about hedging, usually you're selling calls. You're usually in a position where you're planning on owning it. What we do on Fridays is just using the options for leverage. That's it. We're just using the options as close to the money as possible with no time value built in, just so we can now trade. And again, what's good about it is that, let's say you buy 1,000 shares of Uber. You're sitting there exposed, right? You've got 1,000 shares of Uber now, long at 26.85. How much money can you theoretically lose? Think about it. You got 1,000 shares of Uber at 26.85. In theory, how much money can you lose on this trade? The answer is simple. You just put up $26,850. In theory, you can lose it all. But if I buy 10 contracts for 15 cents, how much money could I lose? One of the standards of option trading is you could only lose what you put up. And therein lies where you want to take, it seems like it's more risk, but it also eases your mind, knowing that if it works, I'm going to do this. And if it doesn't work, the most I'm losing here is $1.50. And that sometimes eases your mind. Also, once you know that's as much as you can lose, you trade it a little bit more accordingly, you have more patience, and you're generally going to profit a little bit better. I do spreads. Oh, Kareem, I do it all, baby. I don't do as much as I used to. One of my favorite trades used to be, straddling, or we call it strangles, actually, where you would sell premium on both sides and hope the stock would stay in the middle. Everybody loses but you. And it was good for a market like, I don't remember what year, maybe 20, whatever year it was, when the market went nowhere for like 18 months. And a lot of stocks just stayed in these big channels. You could sell the premium on top, you could sell the premium on the bottom. And as long as the market would stay in that range where you strangled, you collect premium on both ends, and come expiration, all the guys that bought options lose their money and you get to keep all the money, except you're exposed to, unlimited risk. But that's not what we're going to be doing here. Now we're looking for the coveted 1-minute multi-day VWAP earnings reversal. If you get it on a Friday, you want to play an option trade on it, because that's where you make 5, 10, 20. And yeah, I've seen 78 times your money was the record for one that I actually witnessed. I'm sure there's been other ones. 78 times your money on a Cena reversal on a Friday. It was insane because the stock wound up going up about 7 points, and the options were at 5 cents at one point. And that was like slightly out of the money. All right, so that's what I'm looking at. But I want to jump to X because I want to respond to you guys in the room. So U.S. Steel, right? You know how much I'm loving this stock. It's about to break out, but it continuously fails, right? Yeah, I got to learn more about what happened over there. Everyone's talking about Robinhood. So here, U.S. Steel, right? All right. You had a nice move today. Now, again, let's show you what we would have done if we're doing this tomorrow. You ready? This was even better, right? We had this trade on today. This was, again, these are not monster trades, but they work every freaking day. First couple of candles, what are you doing, right? You're just chopping around, flirting with the VWAP. Then you break. Then you rally, never break a new high. Again, that's one of our triggers. And let me tell you something right here on this US Steel chart. Let's say it would have broke 1333 when it got over the VWAP. Usually this is what I'm waiting for. Back above the VWAP, breaking the opening candle high, which it did over here and took off. It still worked. But let's imagine it broke it here and then rolled over. You would have lost money. You would have lost money on this trade. A ball. You lose money trading. It happens. Remember, it's okay to lose. And it's okay to be a loser. Just don't stay a loser. So let me show you what happened, why this US Steel trade was so exceptional. Because it almost fooled me into buying it here, right? But never broke a new high, so I didn't buy it. Next thing you know, it's rolling over. And now it's a short because you broke back under the VWAP and you broke back under the opening range. So if anything, you're shorting it here at 13.14. But now, miracle of miracles, look what helps us make our decision. It gets to the multi-day VWAP, right? And there's nobody left to sell it. And then it rallies back to the 1 minute. But right now, you're still feeling mildly bearish because it never broke back above the VWAP and starts to roll over. There's the moment of truth for me, right? The moment of truth for me was right here. Can't get over the VWAP, but then the rollover doesn't break a new low, right? Boom, bang, boof. Here's your VWAP break that I got involved in. So now we bought the stock at 13.20, sprinkled in a little bit. What are we doing? We're looking at the range where it came from. So I'm buying it here at 13.20 for 600 or 700 shares, whatever it was, right? I'm using the lowest area from where it came from as a stop on a half, and then I go back to that low print right there. Those are my two stops. And if I really want to scatter it, it's only 5 cents more to wait to see if it tests that multi-day VWAP. In this case, we didn't have to worry. Here it breaks, and now I'm buying more right there at 13.33. And then, of course, at 13.50, we start claiming victory, right? In at 13.22, start selling at 13.50. Why? Options expiration, half number, whole numbers. That's where you start taking profit. 13.50, right? Next thing you know, we got another 15 cents out of it. 13.65. Usually I'm waiting for 13.75, but again, I was happy with this trade. 13.65, and I was out. And it starts to roll over. I'm thinking I'm good. And I think it tested, it basically made a couple of new highs, but then did nothing for the rest of the day. So what are we doing tomorrow? Tom, man, you're funny. So what are we going to do tomorrow about it, right? Instead of buying 700, 800 shares of this thing, no, I started with 100, and then I got convinced I was right. I think I bought 500 more at 33, something like that. I could go dig through the orders, but I'm convinced I'm right when it breaks the opening range. So now I got the 1 minute break, and I got the opening range break. So there's two ways to look at this trade, right? Nah, I'm done. That cron is just, all the wheat stocks are done. So here, in this situation, the closer it is to the next strike price is how you decide on which contract to buy, right? So here, there's a tough decision, right? You could go in the money. You know the difference between in the money and out of the money, right? And again, with US Steel, another great stock because a great stock to trade options on because it has half-point increments. They're very liquid, and they have weeklies. So in this case, we have to make a decision. Are we going to go 1350 and go cheap and hope for the massive percentage return, or go in the money to assure us that we're going to make something on this trade? This is a situation that I guess it would have been a game time decision, because I'd rather buy a 13 for 30 and be in this trade. Now I'm going to be making money penny for penny as it increases, opposed to buying the 1350 and the option price is not going to move too much until this thing starts to get going. Now, obviously, if you're trading the 13s, they were probably about 30 cents, I would assume. The 1350s were probably about a nickel. All right. But tomorrow, well, I don't know where the stock traded. Tomorrow, I think we closed at 1350. Tomorrow, we're going to have to look, obviously. Now, what you want is, you want the classic setup tomorrow, right? Again, remember, if you're looking to buy something, you want it gap down, right? You don't walk into a store and say, man, I hope they increase the value of the stock. I mean, I hope you're looking to buy a TV. You don't want them to raise the price on the TV when you walk in to go buy it. Hopefully you come in and it's on sale for some reason, right? You want the stock that you're thinking about buying gap down, right? Especially for us, because we're liquid. Obviously, if you're swing trading U.S. Steel, you just want to open it up. You want it to open up as high as possible. In this case, you want to see this thing back below 1350. Okay? First of all, you want it back below 1350 because that'll be gapping down, gives us a chance of a reversal to the upside. And that half number break triggers the algorithms, and it triggers the option players, and it triggers option buyers, and it triggers people that are hedged. So, for instance, let's say this lunatic Thomas over here, he's got a bunch of U.S. Steel, and he's been selling 1350 calls against his position. Stock starts to go above 1350. Maybe he doesn't want to be called out. So he starts buying the 1350 calls back so he doesn't have to sell the stock, which then sometimes triggers more buying in the stock. One thing leads to another. The belief that if you keep buying option contracts will actually move the stock, there's a whole theory about that. I'm not going to get into it. For us, half number breaks generally work. So tomorrow we're only going to be looking at the 1350s because the 14s are going to be a couple of pennies, and we want to ensure profitability. So either we're buying the 1350s, but again, if it starts to rip, then we'll be looking at the 14s, and we're on the precipice of a breakout. So that's the kind of reason that I think that this U.S. Steel could be a monster freaking trade tomorrow if they let it happen on a Friday. The powers that be don't want that to happen. They don't want massive returns for the public. You'll see this stock most of the time, they'll pin it at the 1350 and chop it around a 15-cent range, and then on Monday it breaks out. But in this case, obviously we're hoping for the best. Maybe the volume comes in. It's definitely going to be worth a shot. So if you're looking at 1350s, let's say this thing opens up at 1333, right? You get those 1350s for 10 cents. And then if we get this massive breakout that I'm anticipating, right? If we could just get past that high print of 1378, we're on our way to 14, and there's really no resistance on U.S. Steel, right? The next resistance that I'm looking at on U.S. Steel is around, let's be conservative. Let's say 14 and a quarter, right? You're buying a 1350 for, let's say, a dime. This thing takes off to 14 and a quarter. What are your 1350s worth now at 14 and a quarter? You guys know simple math, right? You just paid a dime for a 1350 and the stock's at 14 and a quarter. What's up? And you just made close to 7 times, 8 times your money on the trade. And that is why you need to come in prepared for these trades. There's a million things going on. You got to pick 5 that you're going to focus on. Know what you're looking for to happen and put the trade on. Do I consider buying at the close on a Thursday? No, because as soon as the market's opening up on Friday, you've lost the premium, the overnight premium. So sometimes the stock, let's say you bought a 1350 on US Steel, okay? Let's say you bought 1350 tonight for a quarter at the close, and the stock actually gaps up to 1365. You know how much your options are going to be? A quarter. They're not going to increase in value because you lost that much. You're that much closer to expiration. They're going to take that dime off or 15 cents off your contract because you're on option expiration day. I'd rather just wait till the morning opens up. And again, the first 15 minutes of the day is difficult because they're scum. The option players, if you know what I'm talking about, and again, I get into more detail in the seminars and whatnot. But the first 15 minutes of the day, they keep the spreads open to the point where you don't know what to do. Don't ever send a market order when you're trading options, no matter what you do. If you're sitting there and you're looking at US Steel breaking 1350 and you want to buy the option, they're sitting there at a dime bid by 30 on the offer, put in a limit at 20 cents. Raiders. Put in a limit order. Never send market orders ever. Never, ever send market orders when you're trading options unless it's your last resort and you need to get out and the world's coming apart. Because the options, just no matter how liquid they are, they're so easily manipulated, and the whole entire industry is manipulated. We understand. But in the options market, they can open up the spread artificially. And if you send a market order, they will open the spread, print you, and then bring the spread back together. And then when you call down to the complain to E-Trade and they call the offices and whatever, the market makers say, well, that's where the market was. He sent the market order. We have permission to fuck him. So send limit orders only. First 15 minutes, yeah, it's a difficult thing because you have to make your own market. So you have to get a little bit, you like that, right? You have to make your own market. You have to make your own market. And quite often you have to make your own market also. Right, that's why you'll see those dots on the chart all over the place. That's people getting ripped off on market orders. Now, let's fast forward because I want to spend some time with my family and I just want to get to what we want to get. I want to get to what to get to. We're looking at US Steel for sure. But I want to get to the Uber. We got to US Steel. Who reported tonight is what we're going to focus our attention to on tomorrow. So DBX, right? Awesome. DBX, take a look at Dropbox, right? Stock was all over the place. Now, again, you want to write some stuff down. What happens in the aftermarket is often quite mimicked in the next day's session. Look at this beautiful range. $22.22, ripped all the way down to 1986, where I was covering my short. Thank you very much. Thank you. Thank you. Appreciate it. Thank you very much. And then the stock, where did it close? Reverted to the VWAP and pretty much closed right near your multi-day. This stock, there's a good chance. Now, again, if I knew which direction, it'd be a lot easier. But there's a good chance it's going to see 1986. And there's also a good chance it's going to hit 22.22. So that's what we're preparing for. We don't know what direction. We're preparing for this stock to make that move. How is that decision going to be made? Well, tomorrow, when it opens up in the pre-market, it's going to form a new range, right? We're going to keep these ranges, and let's put this right there as significance because you hit that area a couple of times, once there, twice here, 3 times, almost rolled back over. So that's probably going to be significant also. Oh, man, I'm going to be over that Disney too, yeah. But I like these cheap ones, all right, because the options are going to be cheaper. And this is where you can make those double triples easily, all right? So we know that this thing went down under 20 and also went up to 22.5, well, 22.25. Beautiful. Why is it beautiful? Has half-point increments and weekly expiration. You can't do this stuff without weekly option expiration. You can't do it without these instruments being created. Thank you very much. So now you've got the luxury to trade in these half-point increments, making it a little bit easier to make these percentage gains. Because you're not, it used to be you'd have a $20 contract and the next contract would be $22.50. There was no 50-cent increments. Now they're making it easier to get into the middle on these stocks. So tomorrow, we go back to what we've learned about the opening ranges. I think at the end of the day, this thing wound up being up slightly. We'll see how it opens up tomorrow. If it's gapped down, generally we're going to wait to see, if it rolls over and dies and breaks that 1986, and then we might be looking immediately at 1950 puts. If it chops down, starts to recover, gets to the VWAP, is what we want, because we want to see, I love to see earnings reports that are gapped down, test the lows, get back over the VWAP, and then break that opening range. That's when you get the check mark of the Lord. That's our favorite trade in the world. And then, today's 1 minute and multi-day will be pretty much the same. Stock's been, basically the same price for 3 or 4 days. So these are going to all be colliding with each other. That 21 is going to be just insane. So that 21 contract, buying the put or buying the call, we don't know yet. We're going to wait for the trade to set up, and then we're going to go as close to the money as possible. And we're definitely going to be looking at DBX. So we got Uber 2750s. That's going to be big. US Steel 1350 area is going to be huge. This Dropbox 21 is going to be monstrous, right? Now, going to the Disney. Love the Disney. One of my favorite stocks in the world. One of my favorite places on earth. I love everything Disney. I'm a geek. I love everything Disney. I love everything they own. I love ESPN. I love Disney World. I mean, I can't be more bullish Disney. But thank you for saying that. I'll probably be looking for some selling, right? So these are some lines from prior years ago. So let's get rid of these lines. They don't matter anymore. What did the stock do in the aftermarket, right? You ripped. And you spiked there and you came back to there. Those are now significant levels. I'll highlight these, but I could, I do this like a savant now. I could pretty much zero in on where I want to be. Usually I'll highlight the exact price of the candle, because a lot of times, here, let me zoom in on the candle. A lot of times the algos get tripped at the exact price. So I will be trading exactly at these levels. So you highlight the candle, look at the high-low. Your high is 138.90. So at 138.90, that's where my line is, right? Look how it broke 138.90 and tried to break down, classic support resistance, and took off, formed another range right there. And let's put the bottom there, and it tested the 139.50. You think that 139.50 is going to come into play tomorrow? Of course it is. So if this thing gaps up to, let's say, 141, which was the high, let's say it opens up above 141. As much as I think this stock could legitimately go up 5 or 6 more points, generally I'm looking to play the fade. I'm looking to sell some gaps. Now this one, I think is going to remain bullish. I'm not going out on a limb here thinking that even if it does sell off 2 or 3 points, it's going to be a quick hit, and then it's going to recover and continue its uptrend, because this is a monster stock. I think we're going to 150. I love Disney. So I'm not bearish, but I'm thinking sell first. Now, again, once the ranges start to play out, we have the prices, right? If it opens up above 141 and breaks to 141, you want to trade the options, right? You want to buy the 141. So let me check Disney and make sure what we're, some of these don't have the penny increments, so dollar increments. This one doesn't have half-point increments because it's a big stock. Chances are, big stock, you're going to move in bigger increments. So if this is above 141 and breaks back under 141, that's probably going to be the trigger enough for me as a sell. And we'll see where the 1 minute is at the time. And the best part about why options expiration is fun and why trading the VWAP on earnings reports are fun is that you get a lot more volume on the trades. So they form a reliable VWAP pre-market. If you're getting zero volume, you got nothing to gauge. You got nothing to see. You don't know what the hell's going to happen. So if you get a lot of volume pre-market, at least you're going to form a new range. We know what the stock did in the aftermarket. We're going to watch what it does in the pre-market, and that's how we're going to make our game plan. And immediately, you're looking at those 140s, the 141s. And look, if this thing consolidates and then breaks 141, you're buying the 142 call. And then this is one of the rare instances where I'm more of I might be a gap and a go. Again, if you don't get a consolidation before the break, we don't trade it. If it breaks 141 right at the open and starts ripping, chances are I'm not going after it. I don't chase stocks that are gapped up 9 points. I don't give a shit where I think it's going. I'd rather wait for the beautiful trade that works better. But I will be looking at Disney for the fade. And, again, we're going to play it when it comes. But I want to look at the cheap ones again still. So switch SWCH. Let me just check if this has options. This has been a stock that's gone up 100%. So, the numbers came out, spiked up. It might be some selling. I don't read too much into the up 7%. So switch, right? SWCH. SWCH. It's a big move, 10% move, right? Let's take a look. No weeklies, and it only trades in dollar increments. Probably not going to trade options and switch. We don't have the beautiful half-point increment weekly options. So we're not going to pay attention to it as an option trade, but that doesn't mean this might not be, we could be looking at a 2-year high breakout, or we could be saying, looking at a gap that fails. So definitely be watching switch, but no options on that one. So let's talk about Yelp, right? Yelp. Oh, I thought it was a bigger move in the aftermarket. Let me just take a look at the chart where it was. Yeah, gap up and held. Here's your range. 33 is going to be a big number. Obviously 33.90 and then 29. So let me get rid of the old drawings from last quarter. So we're looking at 33.90. We're looking at this first spike area. The first spike area is very important. Look how the first spike area came back to it. 33 is important. Today's VWAP is important. You also got the multi-day, and then always highlight where the stock bounced off 29.06. So tomorrow we got Yelp. If there's a gap on the daily chart, yeah, usually the gap will be filled. So if there's a gap that needs to be filled on an earnings gap, I think that's what you're meaning. I guess it's situation by situation. If it comes up, ask me at the time. But generally, we're looking at these gaps, and they're kind of reversionary gaps also. That's why we play the fade. So this stock, it's been chopping all over the place. I haven't looked at Yelp. I only look at Yelp on earnings reports. Let's see. Are you talking about Yelp in particular or in general? If you gap on an earnings report into the gap, that's where you generally do close the gap, and that's where you'll get those stocks that start the day up. Let's say something like a Disney, there's a gap there, right? And you're gapping into that gap. That's when you get that 9-point move and you're thinking it's going to fade, but you just wind up going up 12 or 13 points and fill the gap from where it was. So I don't know if that answers your question exactly, but again, that's why we're here every day. But if something like that arises, just ask me. So we got Dropbox. Uber, US Steel, Yelp, Disney, Stamp. That's some fucking crazy ass shit, man. I don't know how and why this thing came back, but it's one of the greatest calls ever by Jeremy Newsom. What a sick call. I mean, it was basically coming off 35, and he said this stock could close the gap to 74 if it ever gets going, and just absolutely insane that it's at $90. But they lost their contract with the government to sell the stamps, and the name of the company is stamps.com. Why does this even have a? Thanks, man. Oh, good luck, brother. So yeah, I'll be looking at this now. Let me see. I haven't traded Stamp in a long time. I don't know familiar with if they have weeklies. Oh yeah, they do. So this stock now that you're above the recent highs, you could legitimately tack on 10 or 15 more points on this bad boy. I'm not saying it's going to happen. Usually gaps are meant to be faded, but we'll see how this thing opens up and what the ranges are on the pre-market, right? So post-market, you held pretty well, 94 and change. You sold off to 92.50 for a second. You got the gap right there. This could be the monster of the day, because usually the monster of the day is the one that's the most frightening. But if you pick the right side, again, options expiration over 95, over Macho Grande, you might be looking at $100 stock tomorrow, or easily just fade back to that 89 area. So these options are going to be obviously a lot more expensive than our US Steel, but you're talking about a $95 stock that generally moves in 2-point increments. These options, there's not going to be an opportunity to buy, generally a 15-cent, 20-cent contract. Okay. Bank of America, I never trade it. It's so dead. It never moves. I like it long. More importantly, my dad, big fan. He might still own that somewhere in one of his holdings, but he loves it. If my dad loves it, just own it. He loves Bank of America. I think he's been in that for quite a while too, but I'll ask him. But for day trading, it usually just sits around, and especially on options expiration. Only time I trade Bank of America is when they report earnings, if it's a reversal. But normally I'm not a fan of trading that stock at all. But if you haven't noticed, the banks are on fire. Goldman Sachs, after the Goldman Sachs earnings and that came back, we've been on this massive up. I mean, this last 3 weeks has been pretty much up every day, it seems, right? Unbelievable. All right, so yes, thank you, ZG. Well, Z, yeah, usually I trade the other one, Zillow. Thank you for bringing this one up, because this one is being squeezed. So because there's a squeeze out there, you can get a freaking monster move on this. Okay, you're in this massive zone right here. Your closest, well, I don't want to show that's the 2-year. Let's try to find a closer VWAP. There it is. So you broke over the 1-year VWAP today, right? BlackBerry, I'm 1575 is my target. I still own it. I'm not letting it break. It's the 1-month VWAP at this point now. 1304 is my out. 13, whatever. I'm just using a trailing. I adjust every day, but usually I'm using this 1-year VWAP. See how it's kind of where the breakout was from, well, you don't see it, but if you do see it, there it is. I'm using the 1-year VWAP as the out. So I'm hoping the next leg up gets us past the 1488. And my target was, the first target, 1540. We get through the 1540. There's a slight little gap there to $16.20. Oh, no, he said Bed Bath & Beyond. Yeah. Yeah, Bed Bath & Beyond. He said Bed Bath. Oh, what am I looking at? Bed Bath & Beyond, yeah. But we're going to talk about Beyond Meat too. That one looks interesting for a possible squeeze because it held 77. So maybe the shorts get spooked tomorrow. And now you could trade options on Bed Bath & Beyond without having to pay up the premium. So that's why I like options expiration, because now I could trade on meat with no premium, right? So, it rolled back to the VWAP and held it at the end of the day. So tomorrow, again, this is why, this was one of my favorite trades of the day. Came out of nowhere, right? I was on YouTube live at the time. Oh, I chased it over here when it finally broke the opening, that ass crack. So if you don't know what the ass crack looks like, there's your butt cheek, over the VWAP, over the ass crack. If I wasn't at the desk, that's why I chased this one. But I got back to the desk and I saw, 79.85. That was the trigger from earlier. I bought a little bit there. I bought a little bit more at the 80, and we got the nice spike to 81. Wasn't bad. I think we made about $180 while we were doing the live, maybe 108, 180, some shit like that. Whatever it was. A couple of 100 shares, 300 shares. Not a bad trade. Sitting right back down at the desk. So what would we do? Let's go back to options, right? That's why we're here, right? Beyond Meat has weeklies. Make sure of that. I'm pretty sure. So what are you going to do, right? Let's say this thing's gapping down. You're gapping down. We've already established that 77 was massively significant. We've conquered the stock on the downside, right? For all we know, maybe 77 is the true value of the stock, and now it builds a base, and this thing's going to 3,000. Maybe the vegans got it right. 77 was my target. Break 77 tomorrow, what are we doing? We're immediately buying the $77 puts. Now, again, follow me on this concept, right? The reason people lose money on options is because they buy the contract of where they think the stock's going to go. You don't want to do that. Because remember, you're trading them with only 1 day left. You have to trade them close to the money so you're in the stock, not waiting for it to get to that price. So if you've got the stock breaking and rolling over tomorrow, let's say let's assume it gaps up and rolls over, right? And it's breaking under 80. You either want to get the $80 put or the 79. You don't want to buy the 77 just because it's cheap and you think it's going there. Granted, if the stock rips right to 77, yeah, those 20-cent options are going to go to $1 and you're going to be feeling good about yourself. But I'd rather buy myself an 80 for $1. So that if it falls only $1, at least I'm locking into some sort of profit. I'm risking a little bit more, but I'm not, because if the stock goes my way, I'm guaranteed to make money. Where the $77 put guy, yeah, he's risking less by buying a 20-cent option, but now the stock could go to $78 and the 77 put might only go up 10 cents, where if I buy the 80 for $1, they're going to be worth $2. So I'm guaranteeing making money. And that's where a lot of people make mistakes, and they want to buy the cheap one, but you don't want to do that, especially on options expiration. You want to go out and buy a 77 2 weeks out and hoping that thing continues to tank next week. That's a whole different ballgame. And that's more gambling, because once you take in overnights, you get one dumb upgrade, the stock goes to $83, sits around for a week, and your 77s expire worthless, and you lose all your money. We're trading these in the moment just for leverage, so you want to buy the closest to the money with the least premium built into them. All right, so what we got? We got, I just want to make sure I'm covering every trade that I wanted to cover. Sorry, I didn't get to Zillow. Yeah, thank you, OCD and ADHD. Yeah, once I start talking about something else, I'm gone. All right, yeah, so Zillow. The reason I like this one is because this is a short squeeze that I think may continue. And look at these massive candles. I want to write something down. This is important too. The bigger the candles on the way down, the easier for the recovery on the way back up, because the bigger the candle, the stock plummeted on the way down. So there's really not that much resistance in that candle. right? So you're gapping above the 1 month, right? So let's look at a 3-month VWAP. You're over the 3-month. Your 9-month VWAP is telling you the stock might be going to 38. Now, again, the stock went to 38.40 in the aftermarket. So chances are you're going to see 38.40 again. Now, so let's say 38.40. Look at these massive candles. This stock legitimately, the next area is $40.65. And that's where I think this thing's going to go if it holds the gap. So again, if we're planning on buying something, are we doing it at the open? Hell no. Hold on. This thing could plummet 2 points, chop around for $1, make its mind up, and then take off. Especially with these options on a Friday, this is the only time where it's not chasing, but you'd rather be late. I want to write another one down. You'd rather be late and right than early and wrong. Because if you get it wrong on the first 5 or 6 candles and it starts to trend that way afterwards, you're done. You're done. Your options are going to be done. So it is in the brochure. All that stuff's in the brochure. I think that's page 4 in the brochure. What page? Raiders. So I love this because I love a stock that's gotten its ass kicked and it's very illiquid. So not a large amount of volume on the upside can rip this thing up another 2 points. So what are we looking at, right? Obviously, we got to wait to see how it opens up. Close at 37.60. So in this case, once again, closest to the money as possible. If it opens up under 37.50, we'll be looking at 37.50s. Now you'll have the difference between 37.50s and 38s is not going to be huge, but usually, again, you want to go as close to the money, pay up a little bit just to make sure you make something, because maybe the stock only goes up $1. So if you have the 38.50s, you might not make any money. Even the 38s, if you pay 40 cents for the 38s and the stock rips up 80 cents, they might only go up at 10 cents. But if you're in those 37.50s at 40 cents and the stock goes up $1, now at least you're making that 100% return. So I'd rather pay up a little bit, closest to the money as possible. I love the Zillow. And again, so now we've got enough to look at, right? We don't care about the market. Market's what, gapping down for some reason? That's even better. What are we gapping down? Ooh, 60. If we're not gapping more than 250 in down, then chances are we'll be up tomorrow. Well, then again, what chances are we'll be up every day, right? Isn't that right, Gail? Deb. We never go down. What can I say? But this Zillow, I don't know, something about it. It's the first time I've actually seen this thing gapped up on an earnings report. They have some new product. This thing could be the monster for tomorrow. And again, 2.5 points on an option trade, usually you're talking about doubling or tripling or making 4 or 5 times your money, all right? So tomorrow we're looking, if we're coming in, looking to buy it, we're looking for what? We want it to be back below that 37.50. Give us a reason to believe. So here, you got a double bottom in the aftermarket 36.50. Chances are it's going to open up in this range, 36.50 or 38.50, right? Somewhere in the middle. Tomorrow, when it starts to trade, we form a new range. Remember that range? The VWAP will be forming pre-market, and then we start plotting our attack. So the only time I show up early is Friday mornings. Usually I'm rolling in at 9 o'clock. Tomorrow I get in, I'll start looking at charts 8:15, 8:30. Maybe there'll be somebody interesting reporting tomorrow morning. Let's see if, we are right in the middle of a lot of companies still reporting. So let's check. I didn't even look at that yet. So tomorrow morning, usually you don't have much going on Friday mornings, but let's see. Tomorrow morning, ePay, Duke Energy. Not familiar with some of these. Olympic Steel, I don't know if that's a real stock anymore. Oh, good. Nothing really to talk about. Good. Nothing really tomorrow morning. Cool. So we got a list, right? And that's what we're going to focus our attention on. Now, as a collective and the way we trade, if somebody's hip to something else, throw it in the room. That's what we do. And again, it's a very solitary business, this trading. But what we try to do in our room is that, again, we all trade this very, very, very similar technique because it works. So other people are watching different prices of different stocks. Some guys will be on the same 5 stocks no matter what. They just like that stock. They like those trades. For me, I tend to go where the options, where the earnings reports are. I will. OLED. Holy cow, I was going to bring Alibaba up because it finally broke out. I hate that stock, but I think in this market, in this environment, you're finally going to get back to that 200. I hate to admit it. I looked at that chart today, and that 187.50 was big. I hate to admit it, but yeah, I'll look at the BABA in a second. So Zillow, we got it. All right, nothing reporting tonight. I just want to make sure we're not missing anything that reported this like tonight that I'm not talking about. Activision, what the hell am I forgetting? That was one of the first ones. ATVI. ATVI, another one. Gapping down, bull market. We're obviously looking for this stock to get bought. Let's take a look at the chart. I never trade Activision. You're coming off 52-week highs, and you're getting a little blow off on the earnings report. Chances are you're going to rally a little bit. So you got some choppy action, 52.30 up to 56 and change. 57.52 is a 9-month high. That could be all-time highs for all I know on this stock. I'm not sure. Usually I'm looking at only yearlies. Looks like a yearly high. Oh, no, I'm wrong. 66.60 yearly high. So this got some room. It's got some room. Plus, you got weeklies on this one too. So again, and just based on humans, right? You can't possibly watch all this stuff. So coming in on a Friday with 8 ideas, one of these is going to be a monster. One's going to suck. 4 are not going to do shit. And 2 other ones you're going to miss. But if you have 8 to 10 stocks that you're ready to watch the next day, you know, I could generally watch 4 pretty good. You know, I'll watch 2 on my options platform, 2 on my other options platform, and 4 market maker boxes. So I'm basically going to watch 8 stocks. And then I watch the chat room because today I was tipped off on 2 of my trades by summoning the room. Thank you very much. I wasn't watching AAOI. I just saw it gap down. I had no idea why it was gap down. I didn't see they reported. Next thing you know, AAOI, breaking up the VWAP. Somebody's talking about it. I looked at the chart. I'm like, yeah, you're right. I'm in. Right there, 10.50. I'm in. And got up to 11.21 to the multi-day VWAP. What a beautiful trade this was, too. 1 minute break there. Opening range break here. Half number break there. Got to the multi-day. Call it a day. Boom. Ended it. Look, it got to the multi-day and there was nobody. That was it for the rest of the day. All it did was hang out in the middle. And that was brought to you by, obviously, somebody who knows what style I love. And they brought it to my attention. TTD. Oh, my God. That stock. What the hell is Trade Desk? Wow. This stock sold off 100 points? Wow. Look at this monster. Wow, that's a huge sell-off already, TTD. This is back to the old school right here. This trades in 2.5-point increments. That's how contracts used to be. You didn't have this beautiful ability to trade in half-point increments and all that liquidity. Here, again, you have no choice but what to buy. 2.5-point increments. The thing is, the stock generally moves in 2.5-point increments. So, again, options are traded relatively to what they do. That's the whole premise of option trading, right? Option prices are based on what the stock's done over a given amount of time divided by blah, 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 and the Black-Scholes theory and the whole thing, right? For us, we're throwing all the beta, theta, I, omega, lambda, 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 and the omega moves out the window because all we're doing is using them for leverage on a Friday when there's no premium left and we don't have to worry about any of that crap. We just want to take the trade that we know that works and parlay that into a high probability, high percentage gain on a Friday. All right, I'm losing my voice because I was singing all night, but now we got a couple of ideas. And again, November 16th, if you do sign up, I'm going to do about an hour's worth of options, maybe, if you guys want it. I'm evolving my course. A lot of you guys are very familiar with level 2 and sizing and risk management and platforms and the history and the evolution of trading. I generally like to talk about that for an hour. So instead of doing that, I'm going to go, maybe right into our favorite types of charts, how to find the stocks, what to avoid. And then I'm going to do, my standard Q&A. I want to sprinkle more option stuff in where we'll talk beta, theta, pricing of options and different strategies. And again, there's so many strategies. There's 4 that you really got to concentrate on. Again, covered calls, call spreads, and then, hedging and the short strangle and the short straddles and stuff like that. I mean, there is a ton of stuff you do with options. And again, a lot of it is for hedging, again, but we don't hold positions, so we're not really talking about hedging too much anymore. Hang on a second. Man. By the way, INSG into the earnings report, right? I mean, can I ever win? Do I ever win? Have you noticed? So I didn't get to your questions. Oh yeah, I want to get to the Alibaba. Yeah, old price line. I don't look at that stock anymore. TTD, yeah, very expensive. The silver. I'm a coin guy. I hedged my coins when SLV got to 18. I started selling calls. I sell a couple of calls on the SLV as a hedge against silver, but I gotta go pick up my kid too, right? He's out. He's got a girlfriend finally. Thank God. I was dating girls when I was in the 4th grade. I always liked the ladies. And I was into the Latinas also. I can remember every single girl I remember getting chased by Jennifer Torres's dad. Never show up unannounced to your little girlfriend's house. Don't ever do that, especially the Latin dads don't like you too much. There was Jennifer Torres, Bridget Fernandez, and Michelle Soto. And I loved you all. And then, of course, Donna Rodriguez, who changed my life. And you could imagine why. Donna Rodriguez, you were my first in so many different ways. She was older and larger. And I was her little friend. And I loved every minute of it. I gotta go get my kid. So yeah, Alibaba, before we go, let's take a look at Alibaba for 1 second, right? Take a look at this chart. This thing, obviously, I got my ass kicked gambling on options 2 years ago it's over 2 years now, I think, since that debacle, right? Let's see. This is your long-term chart. And that was me right there. So it's almost 1.5 years ago. So when Alibaba hit that 205 area, right, and then sold all the way down to 165, when that stock powered its way all the way back up and got through that 206 area, I loaded the fuck up on 225 calls 3 months out. I think I paid $2 for them because this thing just triple bottomed, made a massive recovery, and broke out. Stocks that break 206 usually just don't go to 211. They usually go to 225 and 250. I mean, I was putting my kids through college on this trade, and I got hammered. because I loaded up right at pretty much the top. So when this thing broke back above that, what was it, 206, something like that, I bought the 225s going out 3 months, and I almost lost it all. But once it started rolling over, I cut half of them off. And then once it broke back under that 194, I was like, holy shit, this trade ain't working. Luckily, I dumped, and I saved 50% of my money, but that was a hurtful trade. And it's been dead ever since. And I became an extreme hater because of what it did to me. But now I got to put my ego aside because this thing finally broke out of, a 4-month consolidation, right? So now if you can get through 189.71, you're looking at 196, and that could be tomorrow. Because, if a squeeze happens on a Friday, the option players get trapped. They got to start unhedging or hedging for the guys that might be short this thing. So let's take a look at Alibaba before I got to run. And the reason I do like this trade is because I'm scared shit of it. Usually the ones that you're scared of tend to work. So you give me some Alibaba action tomorrow on a gap down, right? This thing gaps under that 187.50 and we get a good reason to buy it. You got to go the 187.50s because the only one after that is the 190s. But I think the 190s might come into play tomorrow. So I do like this Alibaba idea. I hate to admit it. And that's going to be on my radar for tomorrow. So we got plenty of things to watch. I'll be live, probably 8:30 if you guys wake up that early, 8:30 Eastern Standard Time. Don't forget, November 16th, I'm going to go over this for 5 or 6 hours. And, again, if you take the class, you get another month to hang out with me, and we'll ride all the way to Christmas and Hanukkah and Kwanzaa into New Year. And hopefully I make enough money where you stick around and join for life. Because, like I said, I do this every day for at least 3 hours. This is not me selling classes or seminars. It's just a part of what I do. And really all I'm trying to do is make sure everybody that does anything with me or my buddy Solid Jello is that you're getting your money's worth. And that's the biggest part of what I'm trying to do here. All right. My trades are not always going to work. And, it is what it is. I don't have to say that same shit all over again. You know how it is. These trades, they have been working better. I've never seen them work this well. And, come and witness it for yourself. That's really the only proof. Again, I'm as skeptical as anybody out there. And this has been something that I've never seen work as well. And on Thursdays and Fridays, you really have a really nice opportunity to, make some massive percentage gains on trades that, are generally small in nature, but, trading them right with options, you're doubling your money as a minimum, which is amazing. All right. Farewell, my friends. Thanks for stopping by. And I will start getting on a more regular schedule. Again, this is a teaser because I want you guys to come to the room where you can see the charts and the whole thing. All right. Thank you, and thank you, and thank you. I'll see you tomorrow morning. Good luck and have an awesome night. I don't know. I don't know the answer. I thought the pattern day trader rule didn't apply if you're trading cash instruments, but apparently I think I'm wrong. I'm not sure, so I'm not going to answer. But I think you're still, no matter what, because I thought, let's say if you bought $100 worth of options and you're trading $100 worth of these things, you're not going over $25,000. But I guess, Steven's saying, yeah, I'm not, I've never had to worry about that thing. But yeah. But we got to talk about that too. I'm going to be able to get, if you guys are interested in that, in StockTwitz's new app, I could get you past the waiting list if anybody wants to try it, because I work with StockTwits. All right, and I'll tell you more about all the seminars I'm doing. I'm doing 3 massive seminars. If anybody's in New York, I'm going to the Benzinga FinTech Awards ceremony, and we got something going on in January, and then obviously February, New York. We'll probably go to the expo. And then next year for my birthday, let's start planning now. I know a lot of you guys got to ask your wives and girlfriends. But next year around this time, let's go to Vegas, baby. We'll do the expo for one night and we'll party for 2 nights and tell our wives and girlfriends that we were there on business. What's up? All right. I'll see you guys in the AM. Latris on the Menjay. All right, boys. I'll see you guys.